Indian economy and the Indian scenario is like on a highway driving fast. But on the Western world and the world in general, geopolitical and all, we have huge speed breakers. Having said that, mutual funds are the best ways of investing, but you have to love what you do. Next 4-5 years, as we become wealthier, the products on which we spend will change.
Okay.
It will be away from roti kapda or makan to maybe some wants. Investors have to realize that there will always be some risks. Yeah. If there are no risks, then Nifty will be at 50,000 by the time you invest. And we all think that we should retire. I think my lesson from Warren Buffett and Charlie Munger was that I'll retire in my grave.
Hi there, it's the end of the week and you know what that means. It's time for you to join me, Surabhi Upadhayay, at the CNBC TV 18 Market Cafe. As you can see, I'm not in the studio today, I'm not even in our office. I've actually come to BKC, Bandra Kurla Complex, which is Mumbai's financial nerve center. I could probably say that. I'm really hoping to get some great Irani chai at the place where I am right now, along with, maybe even some bun maska. This is soda bottle opener wala at BKC, and I think my guest should be here any minute now. Sunil, it's so good to see you in a very different setting and in a very different look, I must say as well.
I have to match you, right?
This is awesome. I think, our viewers would perhaps know this. Sunil is someone who's a veteran. He's been in the markets for more than 20 plus years for sure.
I don't want to give away my age.
You look as young as the first time I ever met you or interviewed you, which was way back in the day, I remember. Oh, thank you so much. Thanks. So I took the liberty of ordering for you, Sunil. Place is known for its Irani chai.
Always good to have maska pav and chai.
Absolutely. Can't go wrong with that, I think, when you're at this kind of a place, right? So I was just thinking, Sunil, I think when I initially met you way back, I had come to Bombay, I think it was 2005 or 6. And at that time, you were with one of the leading mutual fund houses of the country. It was known as Reliance Mutual Fund back then. It's been a long ride, right?
It's been a long but very enjoyable and very fruitful, I would say, last 20 years, not only for me personally, but for Indian investors generally.
Yeah, absolutely. And you've seen the change, and I want to know more about that, because back then, I think I remember, mutual funds were still a new concept which people were getting sort of, accustomed to. And here we are today, where Indian investors have been consistently investing more in the market this year particularly, while foreigners have been selling.
So actually, if you go back to those days, when we used to meet prospective investors, we had to start with explaining what a mutual fund is. The concept of mutual fund, how safe they are, and so on and so forth. Now you don't need to do all this, So I think thanks to even, media houses like yourself who have taken a lead in educating investors, and obviously the economy has done well, the markets have done well. Yeah. Ultimately, the returns is what pulls investors in, right? Oh, so I think it's been a great, I would say, change, and I would go into saying that we are just about starting. There's a long way to go.
Wow, that sounds really promising, right? And now, of course, you founded Abakkus, which is, of course, your own investment firm, and it's been, what, 4 or 5 years?
5 years and change. 2018, like March, we founded Abakkus.
So how's the whole entrepreneurship phase been for you?
Actually, to be fair, even when I was in Reliance Mutual Fund, it was like an entrepreneurship kind of role. We were given a lot of freedom. But yes, it was a large organization. Setting up Abakkus was a challenge because all my life I was with a major organization, almost 16 years. Yeah. But I love investments, and that is what we do here, and that is what we were doing earlier. But the love and support and cooperation which we have got from people in general, our investors in particular, and all our partners has been massive support. And obviously the performance has helped. So last 5 years, we have grown to almost 20,000 crores, so not bad.
20,000 crores, huh? That's quite a sizable AUM that you're managing over there. And just to get an idea, so I think again, what happened with mutual funds back then, 2000 and 2005, that phase, I think portfolio management services, PMSs as they're called. I think some sort of a transition that's happening now, because earlier this was an investment for only the uber rich, the ultra rich. But I think now with the affluence, there's so much money also in that mass affluent class of India that people want to know more about this.
Yeah, so actually, if you see Surabhi in the US, for example, the retail money goes into the Vanguards and the BlackRocks of the world. And the smart, intelligent, large money tries to find niche portfolio managers who have owner-driven organizations. So you know that this is the guy who's going to manage your money all your life, which is unlike, say, a mutual fund where fund managers can change. And also they have limited capital, so they can do a lot of things which mutual fund maybe might not be able to do. Having said that, mutual funds are the best ways of investing, despite we running a AI for or a PMS.
Really, you still say that?
I think so. It's very simple, particularly for people who want to do SIPs and those kind of stuff. But my interaction with investors, and I meet a lot of investors now. I travel around the country. Is that one, India is growing definitely. India is becoming wealthier. So the number of people who have wealth is increased, and the wealth which these guys have is really, really large compared to what it was earlier.
Where's the money coming from? I always ask this question.
So you mentioned, you mentioned 2005. That time the GDP was like 250, $300 billion. We are now $3.5 trillion.
Just the size of the economy.
And what happens is the way you spend money as you become wealthier is very different. So you're going to eat the same 200-300 grams of food every time. So the quality might increase a little bit, your spend does not increase. The spend as you become wealthier increases in more consumption-led stuff, and that fuels the economy further. And we are a young economy, we are a growing economy, and I think this has only led to wealth being felt more. The other good thing is that earlier wealth was being made out of Indian equities by foreign investors. Now for a change, Indian investors are also creating wealth, and that is also adding to the wealth effect, right?
Yeah.
So if you make money on the equity markets, on your investments, the propensity for you to buy a new house or a new car or spend also increases.
And so to invest again, reinvest that money.
Yes, so it's like a nice cycle where wealth is fueling more wealth.
Virtuous cycle, absolutely. But having said that, I must ask you a bit about the mood that we are in today. And I want to know what you really feel about the market, because we had this absolutely furious rally from April all the way till June. But July onwards, this is a consolidating market. We've been in a 1,000-point range between 19,000 to 20,000, right? July to today. And there is a lot of talk about high interest rates in the West, or what's happening now with West Asia. So there seems to be some trepidation or maybe anxiety. I don't know what's the right word for it, but how do you feel?
So one is, we are looking at a very short period, April to now.
Yeah,
actually, you go back, October 2021, we had Nifty at 18,500.
Yeah.
After 2 years, we are at 19,500.
Now it feels worse.
So 2-year absolute return is like 6-7%.
That's true.
And that will start to show in the base effect of returns if you see hedge funds. The other thing is, December 22 to March 23 was not a great period for the markets. You had some issues about one media house which was in the news, and then you had the Silicon Valley Bank, and then you had the Credit Suisse episode. So there was a risk off. And in March, the Nifty in fact had fallen to 16,500.
Oh, absolutely.
So from that level, you feel that it's up 20%.
It's a good rally.
But year to date, again, it's only 6-7%.
No, very, very, very true.
But having said that, I think the Indian economy and the Indian scenario is like on a highway driving fast. But on the Western world and the world in general, geopolitical and all, we have huge speed breakers. So I think we are right now in a phase where the Indian economy wants to just speed up. But there are global speed breakers which are ensuring that, you just don't go berserk. So I think we are in a nice balance where India is outperformed because the domestic is looking very good. But yes, it's not running away because the global is challenged, both on the geopolitical side as well as on the economy side. US 10-year rates almost 5%, which is a level which makes investors a little jittery.
That's what I was thinking. The last time US interest rates were as high as where they are today, what followed was a global financial crisis. Now, I'm not saying that the same will repeat. Then you have, someone like Mr. Jamie Dimon saying that this is probably the most dangerous era that we've been in the last many decades. So should we be scared? I mean, should investors kind of be a little more cautious than maybe what they are right now?
So, we are in a world where there are so many countries and so many things impacting us. So we should be aware of everything. You know, I would say it was not wise to say that we should just ignore. We should be aware of it, because, you know, in the past such events start building up, and then you have something which just gives away and you just, you know, collapse, at least for the near term. So you can't ignore them. At the same time, the only difference this time vis-a-vis, say, a Lehman Brothers or some other events in the past, that time these were unexpected. Now, this time it's all getting built up slowly. So it is something which is, you know, sort of discounted to some extent. So unless it worsens significantly from here, I think more or less we are aware of this. And at least our view is that from here things can only improve, at least as far as the interest rates in the US is concerned, inflation coming off, because there's a base effect, prices of commodities, agri, chemicals, except oil, which has moved up because of geopolitical reasons, that also nominally. I think everything else which contributed to high inflation has come off. So inflation also logically should come off, and that should ease the interest rate scenario. But we have to track them. We just can't ignore them.
Oh, got it. Please, I'm not allowing you to have your, sip of the chai.
Lovely Irani chai.
You know, I think the issue is that as investors have become more savvy with the stock market, everybody knows the moment there's a 1,000-point dip, you have to buy. Almost everybody. So that's the easier thing to do. The harder thing to do is to decide what's the best way forward when you're in this consolidation range. So first of all, what do you think? I mean, I'm not asking you to put out a level, but what are the chances, the probability that from 19,000 we go to 22,000, or from 19,000 we go to 16 or 15,000?
So both can happen. I don't know when.
Oh, okay.
But the chances of the higher happening is much more. See, first a disclaimer, I have been positive all my life on Indian economy and markets, and that's worked well. You are happier and you are wealthier. But the other thing is, as long as one is confident that the economy is going to grow, I think markets will keep pace. So we have come after 76 years to $3.5 trillion economy. We have no doubts in our mind that this will be 6-7 trillion in the next 8-9 years. And I think the wealth which we have created over the last 76 years, that kind of wealth is again going to be created over the next 7, 8, 9 years. I think any investor who is confident of that, should just keep on investing. Now, whether you invest now and you see a 500-point dip or a 1,000-point dip, that can always happen, because the world is so dynamic. So many geopolitical things which have never happened in the world are happening. You had the Russia-Ukraine issue, China and Taiwan keeps on popping up. Now you have the West Asia, Israel and Hamas issue. Something or the other will keep on happening. But ultimately, I think as long as the economy is looking like growing, markets will keep pace. The only one thing is that investors get swayed by the immediate near or immediate past returns, and they start to build in that the same returns will be made in the immediate future. I think that is not going to happen, or the probability is lower. I think returns will have to start to moderate, because we are not exactly cheap.
So great that you brought this point up, and who better than you to answer the question, because you've seen cycles, you've seen decades in this market. What is a realistic rate of return that one can expect from Indian stocks?
So if you would have asked me 3 years back or 6 years back or 10 years back, I would have said the same thing. Low mid-teen kind of returns is what one should expect, and I would continue to do that. And I'll say that there's a rational thinking behind it. So our view is that ultimately returns are all about profits of the underlying companies, and that's why at Abakkus we don't invest in loss-making companies, because ultimately the profits which our investing companies will make, those are the kind of returns you will make. And our view is that at least for the next 2-3 years, a 15% profit growth is possible for corporate India. In fact, for FY24 and FY25, it will be slightly higher. And even if there is no PE rating, we will have that kind of returns. Now, Nifty at 17.5, 18 PE multiple or 18 FY25 is not cheap, but it's not very expensive. But yes, there are some pockets where, the PE multiples have just gone berserk.
70 times and 60 times.
And some are infinite because they don't make profits. So I think investors have to be careful of what they're getting into in pockets.
If someone is investing now in this environment, geopolitics, rates, etc., whatever is happening, we're running into an election next year. If someone is investing money today, what are, say, the 2 or 3 or 4 things that he or she must very thoroughly consider or remember when you're going to cut that check or make that e-transaction rather. There's not checks these days, right?
No, so I think everything is good. India is growing fast. Corporate returns, earnings are good. Monsoon has been predominantly pretty okay. Festive season is now starting, so the next 6 months for consumption should be good. You go to any place, it's full.
Yeah.
So you can see people spending. So I think all that is fine. But there are obviously some, things to watch out for, like what is happening in West Asia in terms of Israel issue. We hope and pray that it, sobers down. One for the poor people who are losing their lives and, all their belongings, but also to ensure that it does not spread.
Yeah.
So that is
watch
one.
for geopolitics. That will be the first.
That is going to be now, I think, ingrained every year. You'll have
stage.
some issue somewhere in the world. The other thing is, because of geopolitical issue, particularly oil prices is something which you need to watch out for. So though our medium to long term view is oil at $60-70 because of the demand supply scenario and renewables and hydrogen and all innovations happening there, but still in the near term, oil moving up does impact India because currency impacts and all those things will happen. We have an impending 5 state elections and the general elections, and we can all say that there is a case for continuity, at least for the general elections. Elections are elections. You have to be very watchful
It can
about
be,
it.
it can throw surprises.
Yeah.
So third would be local politics. Watch out for,
Right.
what happens next
Right.
over the next
Otherwise,
couple of months.
we are in a decent space. Infrastructure spend is happening. All these initiatives taken by the government over the last 2-3 years in terms of manufacturing and PLI and indigenization of defense, railways, and all those things are definitely happening. China plus one is for real. When you meet companies overseas or talk to analysts there is a move towards sourcing outside of China, and obviously India is one country which also benefits out of it.
Sure.
So all the stars are aligned.
Okay.
Now we just have to pray.
Hopefully these global clouds will not kind of
But one thing
derail
is, investors have to realize that there will always be some risks.
Yeah.
If there are no risks, then Nifty will be at 50,000 by the time you invest. So I think, given a balance, I would say that if you're satisfied with this mid-teen kind of returns, investing now also is not an issue.
Okay, great. So let's then get down to what are your highest conviction sort of themes or areas in the market. You've been a long-term India bull, but now as you look at things, there's been quite a sort of crazy rallies, if I can call it that. PSU stocks, nobody thought. Power is a sector that started moving, nobody thought. What do you find most convincing right now?
So one is, trends, particularly in the short term, have become more shorter. So you mentioned about power or PSUs, or it was defense, railways, EMS and XYZ, some in between textiles and paper and so on and so forth. These are like trades. And I always say this, that this Twitter Wed City, where we have 100,000, 200,000 analysts, is working, and retail is obviously very, very dominant. So, if you look at the number of shareholders in each company, you will see the numbers just rising. And I think this retail is predominantly focused, unfortunately, on very, very near term. And therefore, these trends are very short term. Okay. And I think the short term trends are leading us to believe that these trends are going to continue forever. So in equity investment, our view is that yes, trends, themes are all important, but ultimately over the longer period of time, sustainability of profits and growth is what is needed. With that in mind, I think pharma is looking very interesting. I would say manufacturing and engineering is looking very, very good. Okay. But stocks have moved up. So, you'll have to wait maybe for a time when there is a correction.
That elusive correction.
Correction can always happen,
True,
when you least expect, they happen.
That's true.
I think financials, near term, maybe there is a little bit of pressure on NIMs, but profit growth has been phenomenal. So I would say financials and non-fund based financials. So you have insurance companies, wealth management, asset management, all those things will do well. Because as we become wealthier, we are going to obviously spend, but we will end up investing also. Luxury is going to be a big theme. But right now there are not too many.
We don't have too many listed plays.
But it will happen, right? Okay. Indian entrepreneurs are very enterprising. We'll have a lot of IPOs coming in. Sure.
Interesting. Now that's
so next 4-5 years, as we become wealthier, the products on which we spend will change. Okay. It will be away from roti, kapda or makan to maybe some wants.
Very true, very true. So maybe recap that. There's pharma, there's manufacturing, where one needs to be a little more stock specific. you're looking at any representation of luxury.
Luxury or want-based,
Okay.
like building materials, for example. Earlier we used to have those steel plates. Now we have crockeries. I'm just giving an example.
True.
We used to have
Fancy tiles in the house now.
yeah, even clothes. The same clothes we used to wear for weddings, and now for wedding we have separate clothes. Yoga separate, athleisure separate, running separate, morning separate, evening separate.
Yeah, that's actually true. And then you spend all your time trying to organize them. You mentioned pharma. Let me just ask you a follow up on this because it's a complicated sector. So if someone is looking at things, what kind of pharma companies should they look for? There was the traditional Indian generic makers who are going and making copycat drugs in the US market. Should one look at companies which are more into R&D? Any further clues as to what to consider?
Two segments are now looking interesting. One is domestic pharma. Has always been our preferred bet over FMCG because the growth rates are higher. The penetration of soaps and shampoos is more in India than maybe pharma because that awareness was not there, affordability was not there. Now we have insurance penetration increasing. So domestic pharma and the growth rate has been like almost double digit now in the last 2-3 months. And generic pricing in US has also started to inch up. Plus it's a little bit of a hedge along with IT as far as the rupee movement is concerned. And in this volatile world, if for some reason oil spikes up and rupee depreciates, then these are sectors which add stability to your portfolio.
Okay, got that. You mentioned that you don't invest in loss-making companies. And I must ask you this because the last 1.5 to 2 years was all about new age internet companies coming to the market. Many of them were loss-making and people still invested. They've gone through a cycle. Now, most of these companies are either already profitable or they have a very clear timeline by which they will become profitable. Are you interested now?
So there is a timeline. We'll wait for the actuals to happen. Okay. I adore them. I really salute them for the kind of business they have created, for the huge employment generation which companies like Zomato and Swiggy have done. But our view is that we are investors in listed equities. Our investors have a different mindset. I think those investments are ideal for P kind of investors, who have a view. And I'm very sure some of them would really become large. But we don't want to play the hope trade. So we are tracking them, but we'll wait.
Okay, got that. That's lots of food for thought even for me to think about areas which may do well. As we come to final thoughts, Sunil, I want you to give us any life lessons, any anecdotes. It's been such an amazing journey. I'm sure you've had your share of making mistakes, whether it's at work or in life in general. What can you share with our viewers today?
No, I think I don't want to be too philosophical, but I was in May attending the Warren Buffett AGM, and we all think that we should retire. I think my lesson from Warren Buffett and Charlie Munger was that I'll retire in my grave.
Oh my God!
But you have to love what you do.
That's true.
So every day you should feel energetic to go to office. That means that you love your work.
That's true.
And I think at least for me, my work is my love, and that is the best thing to have. I think the other thing is, wealth is relative, and we all get happy and sad on a relative basis, not on an absolute basis. On an absolute basis, we are all doing well. But, when we see someone close to us doing better, we get a little bit sad. I think this is going to happen in life. So it's a little bit philosophical, but I think look at your wealth in isolation, not in a relative manner, and, you'll be able to enjoy your wealth. And I think third thing I've realized is that you have to take care of your health also. Because for you to enjoy what you have been working hard towards, you have to ensure that you will be healthy enough to do that.
No, absolutely. I think those are words of wisdom that one can really hold on to. And it means a lot when it comes from a veteran like you who's been through it all, who's seen the highs, who's seen the lows as well. So fantastic. Finally, let me end on a good note because yes, as you said, we are rounding up to the festive season. So are you a festive person? I mean, what do you usually do around Diwali at this time of the year? What is it like?
No, so I never leave my house during Diwali because we have a small puja. But this time, luckily, my son is in the US. And after 2015, this would be the first year that all four of us would be together on Diwali day. So I think we are looking forward to him being here. My daughter is already here. So
I quite relate to that, yes, with family being scattered, just having everybody in the same house is a big celebration.
But I think it's good because the environment is very lively. So one good thing about India is we love our colors, we love our festive season, we love our traditional wear. And the environment itself is
Very
like
positive,
good.
yeah.
And this time the good thing is that whether you are in business or in equity markets, all have had a great year.
True,
So,
true.
so hopefully there will be festivities all over.
Absolutely fantastic. Well, I'm already looking forward to it and wish you a very happy festive season in advance.
Thank you. Wish you and everyone at the channel, great
Thank
festive
you
season.
so much for taking out the time. I know you're a busy man, but I really appreciate it. And maybe not too frequently, but maybe once every couple of months we'll pull you out for
Sure,
sessions
sure.
like this one.
Always
Thank
there.
you so much.
Thank you.